Good morning and good afternoon, everybody. On behalf of First Canadian, thank you so much for taking your time to join us on Coffee Talk. My name is Harvey Cohen, and the purpose, by the way, of Coffee Talk on behalf of First Canadian is be able to share some ideas to help you as a financial services manager increase profitability, but most importantly, look after customers so that if the event does occur where they get into trouble due to some financial issues or situations that can occur in life, as a car owner, vehicle owner, we'll be there to be able to help them. So thanks for joining. And we have a number of people with us online right now live. And sometimes when we're by myself, as I am, I love to be able to get opinions and ideas from everybody else. So please feel free if you wish to join in and give some ideas. So for the sake of fun, today's topic, well, it's not fun, it's a serious topic actually. I called it, Give Yourself Some Credit. And what I mean by that is that the opportunity to be able to sell credit insurance increases when there's a need for it. Now, that applies, by the way, to absolutely every product any salesperson markets. If there's no need for something, people won't buy it unless it's an impulse thing. And that ends up being that Mexican sombrero you happen to have purchased while you were visiting somewhere in Mexico. And then you open up your cupboard 4 years later and discover there it is. But in real life, if you do have a need for something, you're going to go out and buy it. One of the issues, though, that can pop up is that sometimes we don't know we need something. Meaning, in the world of insurance, if something bad has never happened to you, you don't think it's ever going to happen to you. Now, I'm speaking generally, of course, but the reality is if you've never had a situation where, and let's see if I'm going to be silly for a moment, but let me paint a picture. If you have never walked down a street, or if you have walked down a street but never been hit on the head by a brick from a building, you really don't think it could ever happen to you. And in the reality of life, insurance is designed for not in the event something doesn't happen, but if in fact it does. In fact, First Canadian believes this as a slogan. We provide protection to Canadian families for when what if becomes what now. And if the what now really does occur, what then? Because if we're not prepared for it, we can have some problems. So the products sold in financial services offices are specifically designed for the what if becomes what now so that you don't have to worry about what then should occur. Make sense? So one of the products, of course, is credit insurance. And it's my favorite of all the products, by the way. I don't know why. Maybe it sounds morbid, but it's true. Because when you're really in trouble, this is the one that can get you out of trouble. So one of the tools that any financial services manager can use is a credit application. There are some parts of our country, by the way, where this is not being done, shall we say, as efficiently as it possibly can. And it's a head-scratching scenario for me. So I'm going to ask a couple of our teammates, if you don't mind. Dean Pesderick, who happens to be living in the Alberta region, Edmonton area. Dean, do any of your dealers pull, as we utilize the terminology, or obtain a credit bureau report?
Yes, most.
Okay, and what do they use them for?
Well, trying to find out exactly who they're dealing with as a customer and what would possibly the best way to, get them financed and to look for some opportunities for stuff like credit insurance.
Okay, appreciate that. We have Brent also in the Alberta region, Brent Miyagishima. Brent, and you spent a lot of time working with your dealers as well, enhancing their performance. Help me for a second. How many of the, or not how many, but do you see dealers actually pulling credit bureau reports and utilizing them?
Oh, absolutely. We talk about that a lot because financial services managers don't get a chance to establish rapport with the customer, same way a salesperson does. We get about, 20 to 25 minutes. And in that time, we need to not only establish some rapport, but also, present our products. And I find that a credit bureau review gives you a good insight into the customer's life and gives you some ideas about discussion, but it also helps you to establish rapport.
Appreciate that. Thanks. Jeff Snow in Atlantic, Canada. Nice to see you, Jeff. Old friends. What about your dealers? What's their habits?
Good morning. Harvey, I guess most of them would probably pull the bureaus on used, but not everyone would pull the bureaus on new. So we're trying more and more. So I don't know if it's a cost thing or that type of scenario, but we push it pretty hard, obviously. But
Okay.
mostly in the use side to see if the person can get financed. That's where we see it.
For sure, because we want to be able to make sure if they qualify, right?
Yes.
Okay. Shannon, welcome from Atlantic Canada also. We're talking, of course, about the ability or the need to pull a credit bureau report for the sake of assisting the financial services manager in their quest to be, shall we say, successful in selling. How many of your dealers are doing that, if in fact any?
I would say I'm probably right along the same lines as Jeff, where we're in the same territory. And, we do have some dealers who will pull and just some where I feel that I get a lot the objection of the cost issue. So they don't really see the value in doing it. But I mean, to me, it sets you up to know where you should be sending the deal. Certain banks have certain, report to certain things. And, so it's definitely something that we need to have a more conversation on and some more training with these FSMs to understand why it's such a necessary thing to set your person up properly and get to know them and see what their credit's all about.
Appreciate that. And speaking of what credit's all about, Raj, you happen to be living in the central part of Alberta, Canada as well. Help me, you used to work for a financial institution, General Bank. Tell me, how important is a credit bureau report?
It's the most important thing, I'd say, to understand the customer's history and to know where which bank to send the bureau to as well. It's the only true indication of a customer's history that customers never probably ever seen as well. There's a lot of information on there that you could pull and derive from there to set up a deal, what to offer for purchases to customers as well, and just to understand and have that high-level chat with the customer about if there's ever been a fraud on their bureau or anything else like that. It's very important.
Thank you. So for the sake of interest now for everybody watching this today and afterwards, credit bureau reports, depending on the province, but let's just do an average, credit bureau reports go back how far? Now I'm going to get into the selling of insurance in a second, as we all are, but how far back do these reports go? Anybody want to help? Jeff, not putting you on the spot, or Raj, you had your light there for a second. How far back do they go?
Equifax is 6 years, and TransUnion is also supposed to be 6 years, but it does show older history. Mostly.
Okay. In some provinces, I understand it goes as far back as 7, so it depends where you are. Regardless, it goes back 6 or 7 years. And when we talk about the 6 or 7 years, when a bank is trying to approve something, ladies and gentlemen, would you agree that they're going to utilize the credit bureau report as a picture, an overall picture of the individual's ability or desire to repay a debt that they promised they would repay? Is that true?
Yeah.
So if that is in fact the case, when it comes to credit insurance, simple question. What's one of the reasons, there are many, but what's one of the reasons why some folks can't pay back their bills? And therefore, if disability is one of those answers, how important would it be to utilize a credit bureau report to be able to show how important it could be for an individual to have that particular coverage? So what determines the scores? And let's help everybody real quick. Brent, how familiar with you? I'm not putting you on the spot. There's a couple of scores that show up on the credit bureau report. What do you know about those? And if you don't, you don't, but I'm just curious.
Well, you got your FICO score or your
Beacon score.
Yeah.
Right.
And I believe that most of the banks, that's what they're using as an indicator of the likelihood of delinquency in the next 90 days or something like that.
Okay. So we have two different scores. One's a Beacon score and one's a risk assessment score. Let me give you back some history if I can. Beacon scores were not always available on credit bureau reports. In fact, back in the 80s, when cars were still being cranked to be started, there were no Beacon scores available at the early 80s onset. What happened was the financial institution would literally, when they received the application for credit, go through the painstaking process of calling all the employers to make sure that the customer was really working there. They might still be doing that. They would actually go through the painstaking process of trying to find out if the person's credit was as good as reported. When the Beacon score popped up, things started to change. Banks started to take shortcuts in regards to some of the approval process. I'm just talking generally for a moment, because when that beacon score popped up, it gave them an overall view of how a person's habits were in regards to paying back. So the beacon score became a big tool for them. And FICO, the American process of that, actually was what this was based on. The risk assessment score does what? Does anyone want to help me with that one? Okay, well, for the sake of fun, go ahead, if anyone. The risk assessment score, basically what it does is allows the financial institution, right, Raj, to be able to ascertain whether the individual is worth the risk to lend money to. In other words, just because the beacon score can be good doesn't mean their risk is good. For example, they could be paying back all of their money on an ongoing basis without any issue whatsoever, but still not be able to borrow more because their risk assessment is too high, or their risk is too high, simply because if they borrow any more, they could go over the top and now lower their beacon score. So that's how these work. Okay, so if that in fact is the case, what percentage of people, if anyone wants to join in on the debate for a second or conversation, what percentage of people do you think, and I don't even know the answer, I'm just throwing this out there for the sake of interest, what percentage of people do you think really understand how the credit bureau reports work? Anyone want to join in and chat about that?
Literally no one.
Literally no one, Dean. So we hear commercials on TV about some of the different credit bureau scoring that is out there. But when people come into the finance office, and we've all had experience with that, when even being asked, what do you know about the credit bureau report? Do you think even financial services managers even ask that question? What do you know about credit bureau reports and how they work? Anybody ever hear that conversation happening? Help me.
They should, but I don't know if it happens much.
Okay, Brent, what are your thoughts?
Sorry, if we teach them to, yes.
Okay, but do you know if they're doing that? How about Shannon in Atlantic? I'm not putting you on the spot, just trying to find out what's going on. Do you think your financial service managers are pulling up the credit bureau report and saying, do you know how these things work?
I think there are a few that, know how to read them and understand like the codes, like the R's, the O's, the I's, what RO, all these different codes. So, but even myself, like I would say, on a scale of 1 to 10, maybe I'm a 5. Like I really don't know everything I need to know as well. So I think that needs to be on us as well to learn more so that we can coach better on the credit bureau in the offices, because, I'm sure if I only know or only rate myself at a 5, I'm sure that there's FSMs who are even lower than that for sure. But there are sure a few that are, can really pull one up and talk about it. But, I would be the very few, I would think.
Okay, appreciate that. Madison, and you're in the Alberta region as well. And just what have you seen out there in visiting some of your clients? Do they discuss the credit bureau report? Have you seen it happen, or is this something you haven't seen yet?
I'd say with my accounts, it's actually surprisingly 50-50. There are a few that I think don't utilize the credit application as much as they should. So this is a great opportunity for me to kind of grow and, bring that to their attention. But some do, some utilize it.
Okay. Now there are some different, thank you. There are some different places where people can pull this credit bureau information. And the reason I'm delving on this for a second, and bear with me, is because of the importance of this to sell insurance. So back one more time, there's a couple of places they can go. They can actually go to Equifax and they can go to TransUnion, right? Our 2 different credit bureaus in Canada for the most part. And all they have to do, in fact, is go right on their bank application, and they can go off the bank app on their smartphone and be able to pull the bureau report if they want to, and be able to get some kind of a score there. Let me give you a little background, if I can, history on this. Way back when the credit bureau reports were starting to really be utilized, what would happen is if an individual pulled their own credit bureau report, it would show as an inquiry. But what would happen back in those days was it would affect the score. And more importantly, the banks would look at it and scratch their head and go, why would you even do that? And it would almost create a red flag when the financial institution was trying to approve the loan. Why would you want to pull your own credit bureau report? What are you hiding, or what are you afraid of us seeing? Now, those were the words I used to hear the banks tell me when they saw that somebody pulled a bureau report. So back in those days, we pulled it ourselves and literally hand wrote the actual report out because there were no computers to be able to do this. By doing so, we were able to see what kind of habits the individual had. Now that was pre-Beacon score. But when the Beacon score came out, and the banks started to look at that number to approve loans, my goodness, things started to change. So I'm going to ask a question now, because as we go through this, utilizing credit bureau report, selling insurance is actually easy to do. And although we find that insurance numbers can be much higher in so many places than they are, we have to ask ourselves, as both people working with First Canadian and people who are financial services managers, why insurance sales are not higher. Okay, let's first do this one. Not high because some of them believe that there's chargebacks and some don't like the cancellations. Once we get rid of all, and they don't make as much money. Let's get rid of those for a second. The reality is, what percentage of people who are buying a vehicle and financing it can never get sick and never get hurt and never die? What percentage? So that's just a general question. So if you can get sick and you can get hurt and you can die, you need the product, period. Not every car can rust because it might be parked in a garage for the rest of its life, but everyone can get sick, hurt, and everyone will die. So it's not a matter of if, it's a matter of when. We've all heard that before. So how can someone not want to offer a product to somebody that we know they need? It's the easiest one. Number two, we've all talked about this from the beginning of this nonsense that we've all been living through, and I say nonsense with respect, the pandemic. If we can't sell insurance during a pandemic, when are you going to be able to sell insurance? And it's still not over, because people are still running around wearing masks, hiding in their houses, and I'm not saying this disrespectfully, because they're fearful of something that could make them sick or hurt. Therefore, you need it. How can you not sell something? If you know you live in an area where a car is going to rust, doesn't it make sense to sell rust protection? Well, if you were to equate rust to being sick, meaning the car is rusty, the car is sick, or the car breaks down, the car is sick, therefore you have products to sell on that. What about us? How do you not sell this? So it's to sell it, is to have fun selling it. So back to the credit bureau report. I'm going to ask a question now, and this is a selling technique I love to utilize. So for the sake of fun, and I'm not sure I've shared this with Jeff before, so Jeff, have to ask you a question, sir. Have you ever utilized any kind of review system, such as Google Reviews, TripAdvisor, to go out and buy or stay at a place? Buy a product or stay at a place?
The odd time, not really much.
Okay, appreciate that. How about Shannon? Have you ever used TripAdvisor, Google Reviews before you go on vacation, or to utilize any kind of service, a hotel, whatever the case may be?
Yeah, I do on occasion.
Okay.
Yep.
Does the review that you see have any effect on your desire to utilize that business or service?
Sometimes, but I also really take with a grain of salt, because I know usually when someone writes a review, they write the negative things and no one really ever shouts from the rooftops the good things that happen. So sometimes I will read a review, but it doesn't necessarily sway me if I see bad reviews, because I do know that, the squeaky wheel gets the grease, in the sense that people only talk about the bad, right?
Sure, absolutely. Madison, how about yourself? Have you ever utilized TripAdvisor or a Google review to be able to make a decision to purchase or not purchase something?
Absolutely.
So what would be something that you would use it for? If you knew something was going to happen, when would you go on one of these reviews, and what would you look for?
Yeah, for me, I, obviously scan Google reviews. I tend to look at obviously the lower spectrum of the reviews, and then the quantity of that, as opposed to more of the good reviews, just to kind of gauge any issues that people have had. So that's kind of how I approach it.
Okay. And and therefore, based on what you just said, have you ever gone to a place or purchased a product because the reviews were fantastic?
Of course.
Okay. And not setting you up, but these are questions I would ask people. Fair enough. Okay. So the next question would be, and when you purchased those products, were you feeling more confident because the reviews were good?
Yes.
All right. Based on that, have you ever not purchased a product or service because of the reviews?
Absolutely.
All right. And when you saw the reviews were plentiful on the negative side, how long did it take you to make the decision to not go along with that particular offering?
Pretty quick.
Pretty quickly. And then you never, for the sake of interest or word tracking here, you never reconsidered it. You just went on to the next thing. Is that correct?
Yeah.
Appreciate that. Ladies and gentlemen who are on this, would you agree there are a great many people who think that way? Help me, yes or no?
Yep.
Okay. So now I have to ask this question for a second. What percentage of people know about the Google reviews done on them? If you were to ask a financial services manager, for example, are there Google reviews on us, meaning on the financial services manager? What do you think they might say? Are there Google reviews on the dealership?
Yes.
Are there Google reviews on some of the salespeople?
Yep.
So it's safe to assume that there might be Google reviews on the financial services manager.
Yeah,
What about individuals? Are there Google reviews on absolutely every single person walking around in North America? Ladies and gentlemen, there are. And that review is actually called the credit bureau. Because you see, every single time you do business with another business, they review you, at least in the event of credit. So here's what happens. As a person who utilizes credit, a review is made on you. And here's what the bureau says about you. They say, you know what? You're really trustworthy. Therefore, if somebody is ever looking to do business with you, they're going to check that Google review, quote unquote, to see what others in similar circumstances say about you. And if in fact you receive 5 stars from the other business doing business with you, they probably will have no reservation on doing business with you as well. However, if some of the reviews have been not so stellar, meaning you've borrowed money but didn't pay it back as fast as you should have, you didn't pay it back at all, what do you think the next business is going to say when they read that review? It is safe to assume that they're going to turn you down. Now, the business becomes us in a different scenario. We are the business we are wanting them to buy from, meaning we want to borrow money from them, yes, but we want them to buy us, so they will lend us money. And if the person who's doing business with us doesn't trust us, we're not going to get what we want, and they're not going to do business with us. The credit bureau is nothing more than a Google review on an individual's past history in regards to financing things. When somebody finances something, they make a promise based on their integrity to pay it back. That signature at the bottom of the contract simply is nothing more than an IOU of days gone by. An IOU form before banks and lawyers got involved was simply an agreement between two people. They made a little piece of paper, took a piece of tree bark, wrote it on something and said, I owe you X number of dollars, scratched their X, put their name on it, gave it to the other person, and that was the contract. We've gotten a bit more evolved, obviously, but the reality is it's still the same thing. So if you promise me to pay me back, I'm going to do a review on you. And if you pay me back every month, I'm going to tell everybody who wants to lend you money or potentially could lend you money to do business with you. The purpose of pulling the credit bureau report, certainly to be able to see if we can find a way to place that business, but to utilize it to sell insurance, here's an interesting thing. Credit insurance can do one of 3 things. If we have a high score, what will credit insurance potentially protect against? Anybody want to help? Brent, help me out. We're going to be seeing each other shortly anyway today, so I'll throw this at you. If you have an 800 beacon score, what's the only thing that score? There's only 2 things that can happen to that score. Stay the same or
go down.
Go down. What can creditor insurance prevent?
Your credit score from going down.
Absolutely. Now, if you have a middle of the road score, what can it do?
It can go down or up.
Go down or up or stay the same, of course.
Could, yes,
of
course.
Where would they like it to go?
Up.
Where don't they want it to go?
Down.
What are one of the reasons that can prevent what can prevent someone from actually earning money so they can pay their bills, so they can protect that beacon score? Disability, in some cases, loss of employment if we cover that.
Sure.
So tell me, doesn't it make sense to make sure you have something to prevent that score from going down?
Absolutely.
Get the insurance. You don't need it, you don't need it. But if you do, this score, based on everything else, assuming you pay your other bills, won't get affected. And how much more pleasurable will your life be based on that?
Oh, absolutely. We need credit. We need good credit.
So the thought on this, ladies and gentlemen, is that score can actually be used to sell insurance easily. The next one is the non-prime individual. And the non-prime individual, help me for a sec, Madison, why is a non-prime person a non-prime person?
They have some delinquent payments, some bad credit history, something happened where they weren't able to meet their debt obligations.
Thank you, I appreciate that. Now, there's only two reasons why people don't pay their bills. One, they don't want to, or two, because they can't. It's a small percentage that don't want to, but there are some that are out there. And every bank is going to pull a review on that individual to see. And then we're going to judge our decision-making based on that. So why on earth wouldn't you want to pull that bureau report out, put it in front of somebody, and please, we say this right now for anyone listening, we must have permission to pull that bureau report. You cannot just do that without the customer's signature. And at that point, once it's done, destroy it once the deal has been completed, because you can't have that sitting in the dealership as well. Privacy Act, and it makes sense to do that. But with that in mind for a second, if we happen to have this bureau report, you can present it in front of somebody and say, Mr. Miss Customer, do you know how this report works? Do you know who gets to see this? Tell me, if you were going to go to a restaurant, would you do a review? Do you think banks do reviews on you? What would you like the review to say about you? That you are trustworthy, that you are able to be, again, not to overuse the word trusted, to be given money to? Or do you want people to believe that you should be, they should be wary of the decision of lending you money? Which of the two would you like them to say about you? Here's what they're saying about you now. Let's make sure it never goes down based on the fact that your car payment is made and hopefully you look after all your other debts and expenses. Because what happens to your life if your credit is no good? Let me ask a question, Ms. Customer, Mr. Customer. How important was the interest rate for you today? Well, if the rate is important, who do you think gets the best of the rates most of the time? The people the banks love and trust, or the people that the banks don't love and trust as much? Let's make sure you take advantage of the credit rating protection program, the credit rate, interest rate protection program. You still have to pay your other debts and expenses, but at least this will pay your car payment, assuming you're qualified for it, to free up that money to pay the other debts that are also being reported on here. Mr. Customer, pray you don't need it, but be real glad you have it if you do. Any thoughts? Dean, what are your thoughts on that?
I think that's great. I think that was really good today, Harv. I love the Google review, the personal Google review comparison. I'm gonna steal that from you here today.
Okay. We're a team. Have fun. And the reality is, if people start to see what these things really are, not what they do, well, not what they just are, but what they do, that applies to every product. People call things all kinds of names. It's called creditor insurance legally, but the reality is it's your credit rating protection program. Now, your good credit rating protection program, because in actual fact, everyone has a credit rating. They just don't have a good one. So you want to have the good credit rating protection program to protect it from the attacks that can occur financially. I can't fix everything, but let's make sure your car payment is made. Hopefully you've looked after your mortgage if they have one, and hopefully you've looked after your credit card separately. But let me ask a question. In the event the bad thing happened, would you care how much it cost at the time, or would you care about how much you're getting at the time? Let's make sure you have the best of the best protection so that when someone is looking at who you are, they'll go, I can trust you. You get what you asked for within reason. Thoughts, comments, anyone?
That was great. Perfect. Fired up
Awesome.
insurance right now.
Appreciate that. That's what this is all about. So let's get the message across to everybody if you think this makes sense. And of course, if you ever want to go over any of this again, please feel free to contact any of your First Canadian representatives to be able to go through this with you on an ongoing basis. Ladies and gentlemen, our cherished dealers out there, the best way to be able to be as good as you possibly can be is to practice, drill, rehearse, use fair, honest methods to be able to sell. But most importantly, understand the product knowledge. And credit is product as well. There should be knowledge. Get to fall in love with the credit bureau reports and get to fall in love with selling insurance, because someone's going to need it. If they don't need it, who cares? But if they do need it, they're going to call you, they're going to call us, and they're going to discover that we care. And that's all that matters. On behalf of First Canadian, thanks everyone for joining us today. Look forward to seeing you again in the near future. Remember, look after your customers, because it's not a matter of what if, it's a matter of what does happen if it does occur. What now? Thanks, everyone.